I guarantee you this is going to be a thing a lot of IRS people are going to look for because it's easy. And the IRS tends to be relatively lazy. So they go for the easy wins. This isn't. Hey, TSP. This is Matthew Sursley with AgoristTaxAdvice.com, here to talk about this new tax bill passed just a few weeks ago. I am getting a lot of questions about the tax-free overtime portion of it and whether it's possible for a self-employed person to take advantage of this. I totally get why it's tempting. I like where your head's at, but in this particular case, I think it's a bad idea. So, first of all, overtime only exists within an employer-employee relationship. If you are a sole proprietor or taxes one, or a partnership or taxes one, you're not an employee. You don't get wages, so you can't get overtime. Like that's full stop. No W-2, no overtime. Now, you do have the option of either being a C Corp or an S Corp and being an employee. I'm not going to go into all the reasons why a C Corp usually is a bad way, but suffice it to say, even if this worked with the C Corp, you probably are paying so much more taxes as a C Corp than you're saving with the strategy that it doesn't make any sense. So let's go with the S Corp because that's what most small business people are going to do most of the time to save money. Well, now you are an employee and you own the company that's the employer. Now, overtime already has special rules you have to follow. It has to be reported on your W-2. It has to be based on actual time records. And yes, the IRS does request those somewhat regularly. And most importantly, they have to be paid by somebody who controls the employee's hours. And yet, technically, you aren't the company, but when you run the company and make the decisions for the company, you are not different than the employee in this respect. So I think the way they're going to rule on this is to say, if you're an employee of the company you own, and if you get to determine your own schedule, you cannot take advantage of this tax-free overtime thing. Now, if you work for a company with 10 other owners and you're a minority owner, and they say, hey, you need to work these hours and we're going to pay you overtime, that might fly. That's not the situation almost anybody I know is in, but it might work. Now, here's the other thing. You're not talking about a lot of tax savings with this. First of all, the tax-free portion is only for federal income taxes. If there are, and it's only on the overtime portion, not the regular hourly portion. So let's say you're doing this to get an extra $1,000 a week in work. Well, if you're doing time and a half, only $333 of that is the tax-free overtime. You're still paying tax on the other $667. There's a really good chance that once you factor in your state income taxes, if you have any, and your FICA taxes on the whole $1,000, not the 667, that you're really not coming out very far ahead here. In addition, as an S Corp owner, you're already required to pay yourself a reasonable salary. If you've been in business for a while, you've told the IRS what you believe a reasonable salary is. So the only way to do this is to add overtime onto that. Well, now again, you're paying more in FICA taxes, 15.3%. You're losing QBI on that, the qualified business income, which was 20% and is now 23% of the non-wage income you have from your business. I've run the numbers and yeah, you come out ahead, but it's not very much. And if that's what you make for a couple years, well, this deduction goes away in a couple of years. And now maybe you have a problem where if you try to lower your salary back down to where it was before, you've made the case to the IRS, no, a reasonable salary is this higher number. Now, the bill specifically tells the Treasury to review situations that look like they lack a bona fide employer-employee relationship. And when they find that, to go to get back any benefits from that and to apply, well, I mean, the bill doesn't say this, but when bills say that, they're basically telling the IRS, apply the 20% accuracy penalty in addition to any other penalties and interest. So let's say you do this. Let's say you don't get away with it. Well, now you're going to owe the back payroll taxes on some section if they reclassify you, maybe. You're going to owe a 20% accuracy penalty. You're going to owe 0.5% per month in interest. And this is really easy to catch because, again, you're going to file forms with the IRS, one of which says you are the owner of the business. In many cases, the sole owner or one of two owners in a business. And then a month later, you're filing paperwork with the IRS saying, I'm an employee of this company and I got overtime because that's going to be on your W-2. So this is not like a lot of things where, okay, technically this isn't allowed, but maybe you can kind of hide it in the paperwork somewhere because it doesn't get called out specifically. But overtime gets called out specifically. So this is going to be a really, really, really easy thing for them to catch. And again, they put it in the bill. Hey guys, look for this. And I guarantee you this is going to be a thing a lot of IRS people are going to look for because it's easy. And the IRS tends to be relatively lazy. So they go for the easy wins. This is an easy win. And if they audit you over this, they know they're going to win you on this or beat you on this. But now maybe they find some other things and it's even a bigger deal. And let's say you win this fight. If you go through an audit because of this, you still come out behind. So I just see the cost benefit on this to be way in the negative. It is not worth playing in this game, in my opinion, for the vast majority of self-employed people. Now, if you want to maybe hire your kids and pay them overtime, that might be a better way to use this. Of course, they better be working enough hours for that to be the case. But that's a situation where I think this works much better, is when you can pay other people and do this. Maybe it's a way to pay even more tax-free to your kids. That's my favorite situation for this. What else should you do? Well, first of all, if you're in business and you haven't looked at whether an S Corp is going to save you money, you need to look into it. Again, for the vast majority of business owners, it is the best way to run your business. It's not universal. It's actually not how I run my business because of some things going on with me and my family and my life. But for the vast majority of cases, that's going to save you money. Make sure you are loading up on all of the legit business deductions out there. Accountable plans, travel, equipment, home office, mileage. Have the company pay for as much as it possibly can legitimately. That's a guaranteed way to save money on taxes. And again, if you maybe cross the line and put in something maybe is a little bit sketchy, it kind of gets hidden in everything else. You're not waving the red flag the same way. So even if you want to be more aggressive, you're far better off doing it with the deductions than the tax-free overtime. Finally, this is not the best way to do things because it defers taxes mostly, but make sure you're maxing out your retirement accounts. Do a Roth IRA if you can. Do a do a regular IRA. If you're working for yourself and you don't have any employees, you can do a solo 401k and put away $70,000 a year. You can do a defined benefit plan, which is basically a pension for yourself. There's lots of ways to save a lot of money on taxes that are legitimate, that won't raise any red flags, and frankly, that will probably save you a lot more money than this anyway.